Hello and welcome, everyone. My name is Dylan Ryder from the Johnson County Library's Career and Finance Committee. Thanks for joining us this evening for this program, Getting Your Financial House in Order. We'll have time for questions and answers after the presentation, so please put your comments and questions in the chat as they come to mind. A little bit of information about our presenter. Her name is Nancy Doyle. She's CFA. Nancy is a consultant, author, speaker, and advocate for financial literacy. With 30 years of experience in investments and wealth management, she has the insight to help people become more knowledgeable and more engaged regarding their personal financial affairs. In Manage Your Financial Life, a thoughtful, organized approach for women in Manage Your Financial Life just starting out, Nancy shares a system for managing your financial life along with real-life experiences, hers and those of family and friends, to illustrate key concepts. A graduate of Georgetown University, Ms. Doyle received her MBA from the University of Michigan Ross School of Business. She holds the Chartered Financial Analyst, or CFA, designation and is a professional member of NAPO, that's the National Association of Productivity and Organizing Professionals. Of course, you all knew that. Anyway, enough from me. I'm going to go ahead and turn things over to Nancy. Nancy, thank you so much.
Well, thank you, Dylan, for that nice introduction. And thanks to everyone at the Johnson County Library for inviting me to speak tonight. I also want to thank everyone sharing in the conversation to talk about something that I am truly passionate about, and that's all of us being engaged in managing our financial lives. A little bit more about my background. I've been in the finance and investing world for a long time. As Dylan mentioned, I've worked in banking, corporate finance, investment analysis, and most recently, wealth management. For more than 16 years, I've worked with one family helping manage their money, similar to a family office. And I want to note that I am an independent consultant. I don't work for one particular financial or wealth management firm. And I think that independence and objectivity is important in terms of my work with the family, but I also think it's key in terms of my writing, my speaking, and my work on financial literacy. As a reminder tonight, I'm providing information and I'm not giving specific investment or tax recommendations. So how does one manage their financial life? Well, no matter what your age, or your stage in life, or your resources, it comes down to 4 steps. First, you must be organized. Organization is essential. Second, you have to analyze your financial profile objectively, especially before you make big changes in your life. Third, you have to educate yourself about money and investing. And last, you need to put your money to work or save and invest it. And tonight, we're going to talk about a couple of ideas and concepts that relate to these 4 steps. And in particular, we're going to focus on getting your financial house in order. And since I wrote my books, I've been asked to do a lot of speaking. And the number one topic people want to ask me about is this same topic. People feel overwhelmed with their personal finances. And if you think about it, our financial lives are complex, especially compared to our parents and our grandparents. We have so many more ways to save, to invest. We have so many different ways to even transact with one another. Also, we are inundated with information and documents, more so than ever. And these are paper documents and also electronic documents we keep on our computer. And when you go through a life transition, oftentimes there are financial impacts. So every time you go through a life transition, maybe getting married, having children, starting a business, changing careers, and unfortunately, divorce and widowhood, those are times that people often feel disorganized and that they're not really in command of their personal finances. So how does one get their financial house in order? Well, each person is unique. My financial life is different than your financial life. But tonight I'm going to talk about 5 topics or 5 tools or things you can do to help feel more engaged, more in charge of your personal finances. So we'll start with a financial spring cleaning. We'll move on to preparing an in case of emergency file and an in case of emergency plan. I like to call these the ICE file and the ICE plan. We're going to build an asset allocation grid. We're going to talk about how you can analyze your spending. And last, we're going to talk about communication in terms of our finances. I also want to mention that the in case of emergency file and plan and the asset allocation grid, we're going to walk through a scenario and I'll show you some examples. And I've put those slides on my website. So later on, you can download those when you decide to do this for yourself. So let's get started with the financial spring cleaning. So with a financial spring cleaning, as I mentioned earlier, many people feel overwhelmed, and oftentimes they don't even know what they have or where it's located. Many people have what I call a pile or a drawer or a file folder of things that are important. And oftentimes they go to find something important amidst all the stuff that is important, and they can't find it. So this is a way to get your life in order, your financial life in order. It's similar to when you go through your closet and you take everything off the hangers, everything out of the drawers, and determine what you're going to keep, what you're going to donate, what might need repairs, and what you have to get rid of. It's very similar to that idea. So what I suggest people do is choose a room in your home or an area of a room to work, because this could take you some time and you also want to take breaks. What you'll do is you'll gather up everything you have that relates to your financial life. And you'll do this in terms of the paper, and also you do a similar exercise clearing out your hard drive on your computer. And the idea is you need to determine what you're going to keep, what you can recycle, and what you need to shred. And as you go through this exercise, it's also important for you to develop a system for keeping track of this information going forward. Because if you don't develop a system that makes sense for you, you're going to be right back where you started. Also, I recommend that people use consistent systems for maintaining their paper and their electronic files, so it's easy to find something, whether it's in a file cabinet or on your hard drive. And I want to also emphasize that since everyone's financial situation is unique, it's really important to talk to your accountant, your tax preparer, maybe your attorney or financial advisor before you start this journey, because you want to make sure you're not getting rid of something that's unique to you that you should be keeping. So let's talk about what you should keep. The first category are things that you should keep for 1 year. I recommend people keep their monthly investment and credit card statements for 1 year. Then you'll receive an annual summary and you can shred the monthlies. I also recommend that people keep just the current year insurance policy until you get the renewal. Once you renew the policy, you can get rid of the old, you can shred it, and then put the new information in the file. People often like to keep their utility bills. Maybe you want to look and see what you spent on utilities the same month a year ago. That's fine. But utility bills happens to be one of those areas that people tend to save a lot more than they need. So just keep 1 year if that is something you want to do. The next category are things that you're going to keep for taxes. And I think it's a conservative policy to keep things for 7 years from the date you file your taxes. Now, it's not 7 years from December 31st for a tax year. It's 7 years from the date you file, which is most likely in April. So keep your tax returns and the supporting documents. It's also a good idea to keep your bank statements for that same 7-year window and your credit card annual summaries. It's often helpful to be able to look at your transactions during that 7-year period. Next, you want to keep track of things for as long as you own and a particular item. For example, if you make an investment in a mutual fund, say you open an account, put money in the account, and invest in a mutual fund, you will receive back what's called a confirmation. And that's a statement that shows the date you made the investment and the amount of your original investment. That's important to keep for when you decide to sell that investment. You need that information for your tax basis. And this is called your cost basis. You also want to keep your year-end statements for any of your investment accounts because they list for each asset the cost basis. And if you have a financial advisor or work with a firm, they can also tell you the date that you purchased it when you go to sell it. You should keep receipts for all major purchases and anything that you insure. So I'm thinking things like appliances, clearly your car, anything of value that you insure, keep that receipt. You also want to keep track of the records related to any time you purchase or sell a home. And when you purchase a home, keep track of anything you do to improve the value, something like adding on an addition or building a new garage, because those things affect the cost basis of your home. They will increase it, and you need to document that for your taxes when you sell your home. There are also documents that you should keep indefinitely. Your vital documents, things like birth certificates, Social Security cards, adoption records, military service records, marriage certificates. You also want to keep your essential legal docs, your current will, powers of attorney, healthcare directives. I think it's a good idea to keep any documentation related to loans, whether it's a mortgage or a car loan. And I also recommend keeping the payoff notices. I think it's always helpful to be able to prove that you paid off a loan. With your retirement accounts, you need to make sure that you keep a record of the money that you have contributed into your retirement accounts over the years, and also anytime you take money out. Just make sure you have an up-to-date record, because your retirement accounts, you often will have those for decades, not just that 7-year window. So here's some examples of files that you may want to create once you've gone through and determined what you're going to keep. I really like having a current year tax file. If you think about it, during the year, you have expenses, you have transactions, things you have to report on your taxes. Maybe you make a donation or you pay tuition from a college savings plan. All those things you have to document at tax time. And if you keep it in one place, it really is a time saver. You should also keep a separate folder for each bank account and investment account that you have, and a folder for each type of insurance you have, so you can keep the most current policy and any claims you may have on those insurance policies. Here's some other ideas of files that might be helpful. I like to keep a house file where you can keep a list of the maintenance providers, so you're not running around looking for that every time you have a repair. And you can keep the documentation for any home improvements or renovations that affect the cost basis of your house. I recommend keeping a folder for each car that you have, so you can keep track of the purchase information, your warranty, and any major repairs. You definitely need a folder for those receipts we talked about earlier for any big ticket items or anything insured. And I also like to keep a travel folder, a folder for current trips. And if you take a special trip that you put a lot of thought into planning, keep a folder, because you may want to recommend a hotel or a tour to someone else who's going the same location. I think a holiday gift file or folder can be helpful to keep track of the people that you tip at the holiday time. And another idea is a family history folder. There may be obituaries or an article about a relative that you want to save. And if you're ever spending time with an older relative, they may share some stories or some family history that you didn't know about. You can jot that down and put it in the family history folder. Your kids and grandkids will be thankful that you did. So here's some observations about the financial spring cleaning. First of all, you will likely find surprises. I know 3 families that found life insurance policies within their parents' papers after they passed, and those life insurance policies were in effect. I know people who have found old photographs, even love letters. I'm completely serious. You never know what you will find in these files. So please go through them with care. Take your time. Also, it's highly likely you will have a lot of information that you don't need to keep and that you can either recycle or shred. If you have a lot to shred, consider using a professional shredding service. They're very secure. You can walk in, you can watch them put your documents in the machine, and everything gets shredded and everything gets recycled. So it's also good for the planet. And it's not expensive. The last time I helped someone with a financial spring cleaning, I think it cost $12 or something like that. So it's not expensive, and it's a big time saver. So let's go on to the second area of getting your financial house in order. And this is preparing an in case of emergency file and an in case of emergency plan. And I like to call this the roadmap to your financial life. And going through this exercise, whether you're single or if you have a partner, you and your partner will be more up to speed, more informed, more engaged. But if life throws a curveball, you'll be so glad to have this information in one place, because that's not the time you want to be running around looking for important financial or legal information. So how does one do this? Well, first, for the ICE file, you've done your financial spring cleaning, so it's easy to gather up your essential legal documents, your vital docs, your birth certificate, social security cards. It's a good idea to make copies of your driver's license, credit card, front and back, and passport. I recently had a family member who lost her wallet, and she immediately was able to call the credit card company and let them know. This is also incredibly helpful if you travel a lot. I also think it's a good idea for you to walk through your home and take a video of your interiors, your possessions, anything of value. You'll be glad to have a copy of this on a thumb drive if you ever have to make an insurance claim. So you want to take this information and store it in a safe place. And you have a couple of options. You could put it in a safety deposit box at your bank, or you could go to the hardware store and pick up a fireproof, flood-proof box. They're not expensive, and keep this at your home. Now, the bank is probably more secure, but remember that emergencies happen 24/7. And your bank is not open on the weekend or in the evenings. So most people tend to keep these things at home. The key is put it in one place and put it in a safe location. So let's move on to the ICE plan, which is really the heart of the roadmap to your financial life. So you've done your financial spring cleaning. It's easy to make a list of all of your accounts, your financial accounts. You should also make a list, the name and contact information for anyone who helps you manage your financial life. This is the perfect time to review your beneficiary designations on your insurance policies and your retirement accounts. And recall, when you set either one up, you designate a beneficiary, and that is called a contractual designation. And the reason why that is important is if your contractual designations or the beneficiaries you name on your life insurance policy and your retirement account at work or your retirement plan at work, if that's not consistent with your will, they go with what you list as your beneficiaries on your retirement account and your life insurance policy. And this is important because I have heard stories of retirement accounts going to former spouses because the person, when they got divorced, they didn't update their beneficiary designation. So this is real. Make sure that they are consistent with your will. This is also a terrific opportunity to take a look at your passwords. We all have too many passwords. I admit it, everyone does. But people are often overwhelmed by the amount of passwords they have. And it's important to review the list, make sure you know the most important passwords, you and your partner, if one of you is more involved in managing the financial affairs than the other. I know some people keep them in a book, a plain book on their bookcase. Don't keep it near your computer. Some people may use a password manager service. I've used one for a long time and love them. You have one master password. All of your passwords are stored securely on the cloud or in the cloud, and it really is secure. Most services that I'm aware of will allow you to do it for free up to a certain number of passwords. So that's a good idea to explore if you're interested in that. Now, here's an example of what an ICE plan would look like. And this is on my website, so you can take a look at it. And here they've listed the people who help them manage their financial life and some helpful notes. Things like, where's the will located? What type of tax return do they file? Where is the safety deposit box? And importantly, where are the keys to the safety deposit box? Which insurance company do they use for which type of insurance? And where are the mortgage documents? On the second page, you'll see they list someone called Access to Passwords, Ann Martin. This is an example I came up with. But Ann Martin is what I would call your key person. And a key person is most likely the executor of your estate, or perhaps it's a sibling or an adult child, someone that you trust implicitly to step in and help you manage your financial affairs if you're not able to do so. In this plan, they also list which bills are paid automatically, which is incredibly helpful if someone's helping you with your bills. And that's common for things like HOA, utilities. They also indicate there's some bills that they can pay online through the bank's website. So here's an example of some of the important account information you would include in your ICE plan. So it's the name of the account, the title, and some helpful notes. For example, what type of IRA is it? Which credit card is used to pay bills? Which person in the couple has a 401k plan? Which partner does it belong to? So here's some observations about the ICE file and plan. This is common sense, but please do this before an emergency occurs. When life throws you a curveball, you don't want to be running around looking for important financial information, looking for healthcare directives. Please do this now. Also, common sense, this is only helpful if someone knows where it's located. So when you do this with your partner or by yourself, make sure that at least one other person knows where this information is. And you do need to review this and take a look at it. When I say often, I mean maybe once a year is a good plan. You don't have to do it quarterly, but just make sure it's up to date because life happens, things change. So let's look at the next area we're going to talk about, and this is the asset allocation grid. And whereas the ICE plan is the roadmap to your financial life, this is the dashboard. And as I said earlier, we all have a number of financial accounts. There are many ways we save for retirement. And it's truly important in terms of getting your financial house in order to take a holistic view of your assets. And this is how one does it. So you are creating an actual grid. So you can take a pencil and paper and calculator, or you can use Excel and create a simple Excel spreadsheet. For those of you that don't work with Excel, there are tutorials online, and it really is a handy tool for managing your personal finances. But going back to the grid, you've gone through your financial spring cleaning and you've created your ICE plan. So it's so easy to make a list of all of your financial accounts that have assets or money in them. So bank, retirement, investment, those go on the left-hand side of the grid. Now, across the top of the grid, you list the different types of investments you have in those accounts, the different types of asset classes. And some common ones are things like cash and money market fund, or maybe you have stocks, Maybe you have bonds or municipal bonds. Put those categories across the top of the grid. And then for each account, you put the dollar amount of each asset class in each category. And this is very easy to do because any financial firm who sends you a statement will give you the total amount in each asset class. You don't have to add it up yourself. And it's on the first or second page of any statement, whether it's paper or you get your statements online. So it really is pretty easy to find this information. And when you filled it out, it looks like this. And I've also included this on my website along with the ICE plan and file information. So you can download this if you want to create one for yourself. And here I've just put in numbers to illustrate what one might look at, what one might look like. And there's a couple of things that are quite handy in terms of the asset allocation grid. And I think I'll illustrate why it's so important to take this holistic view. Here you can see the aggregate asset allocation across all of the various accounts. And I think everyone knows that it's important to be diversified with your investments. You don't want to have all your eggs in one basket. You don't want all your money in stocks or all your money in cash or bonds, because different market and economic factors affect the asset classes differently. And that provides protection to the downside risk that might be inherent in one particular asset class could be offset by upside potential in another. So that diversification helps mitigate some of that risk. And it's helpful to look at an individual account and how you're invested. But the most important thing is to make sure that you're comfortable with the aggregate or holistic asset allocation. Another thing that's important to look at is what types of accounts your assets are in. And we have wonderful opportunities to save for long-term goals like college and retirement through these types of accounts, whether it's a 401k plan or an IRA, or say a college plan like a 529, there's terrific tax benefits in doing so. But on the other side, if you try to access this money early, there are taxes and there are penalties. So these are accounts that you really should not touch unless you absolutely have to. And what's helpful is you can say, okay, these accounts at the top are things I can access without any penalties or taxes. And these are called taxable accounts because every year you have to pay taxes on the dividends, any income or capital gains. But the beauty is that you can access them whenever you'd like. So you need to look at your assets in these two different lenses. Speaking of liquidity, it's also essential that you look at how much money you have within those taxable accounts that you can access that is in cash or money market. And this is called your emergency reserve. Some call it the emergency fund, but I prefer the emergency reserve because this person has a couple of sources that they can access if they need it. And the emergency reserve is important in the event that you are temporarily out of work, or if you have a major repair or something you're not anticipating. Financial planners recommend that we have approximately 6 months of those essential living expenses, things like rent and utilities, food, put aside in a very liquid, easily accessible account. And liquidity is really just a term from economics that indicates how easily an asset can be converted to cash. So the money in your checking account, you can go to an ATM machine and get cash 24/7. Well, the money in your retirement accounts, yes, you can access them, but you'll pay taxes and penalties. And in fact, you can access the money in your taxable accounts. Maybe you have some stocks or bonds, but this year in particular, where stocks have not performed well, maybe this is not the time you want to sell some of the stock in your taxable accounts because the stocks haven't performed well. So you really want to keep track of what you have in cash and money market. And here, this person knows the total, and they can make sure that their emergency reserve is sufficient. So here's some observations about the asset allocation grid. I think you can see why the consolidated view is essential. This is the best way to determine whether or not you have adequate liquidity and an adequate emergency reserve. And like most things in terms of your financial life, you do need to update it on occasion. I think even once a year, maybe once every 6 to 9 months, whatever you're comfortable with, because you'll continue to put money in savings and the value of your various investments will change over time. So you want to look at this on occasion. So let's move on to the next step, and that is analyzing your spending. And analyzing your spending is a terrific diagnostic tool. It gives you a good sense for really where your money goes every day and the impact of your day-to-day decisions. And many of us have heard financial gurus talk about, well, if you didn't have a latte every day, then you'd be able to achieve your financial goals. Well, maybe it's not the latte. Maybe there's something else you're doing that you don't realize that if you make some changes, you'll be much further along. And, some people, the latte is their treat. They look forward to it every day. So again, each of us is unique. It's important to look at our personal spending to see what we can do to move toward our financial goals. So how does one do this? Well, with technology, this is incredibly easy to do. And frankly, I'm surprised more people don't do it. I guess it's a little bit like when you come home from vacation, you have to get on the scale. You almost don't want to know. But trust me, you'll be glad when you do this because it's really eye-opening and it really is empowering too. So what you'll do is you'll go to your bank website, your credit card website, and you can go to Venmo if you'd like, and download your spending activity for a period of time. Even just 2 months will give you a good sense for where your money's going every month. And look at each expense type. So I mean things like, how much are you spending each month on housing? How much on food, going out with friends? How much for utilities or your hobbies? Do you have a car payment every month? Do you save automatically every time you get paid? You need to look at each expense type. Then once you have a rough idea of what you're spending on each expense type, then you assign it to one of 3 categories. Is it an essential expense, like I mentioned earlier, things like housing, utilities, food, things you have to pay for every month, no matter what? Or is it a non-essential expense, something like hobbies, going out with friends, travel, the wants in life, the fun? The last category is for things like a car payment, automatic savings, student loan payment. All those things are in the 3rd category. The final step is to look at each of those expenses as a percentage of your pay. That's a good barometer to give you a sense for if a certain expense category might be out of line. So let's look at some guidelines. And these are, again, guidelines. Everyone's situation is unique. Financial planners recommend that we try not to spend more than 50% of our take-home pay on the essentials, things like rent, food, utilities. They also recommend that we try not to spend more than 30% of our take-home pay on the non-essentials, going out with friends, dining out, entertainment, hobbies, which means if you do the math, you'll have at least 20% of your take-home pay to put towards saving and paying down debt. Now, this 50-30-20 rule has been around a long time, and I'm definitely aware that right now housing is very expensive. Food is very expensive, whether you're at the grocery store or you're getting carry out or in a restaurant. So I understand that for the essentials, housing, food, that 50% number may be tough for some people to meet that guideline. That's okay. The most important thing is that you know where you're starting and look for opportunities to make some changes. Another rule to consider or guideline is looking at your rent or housing as a percentage of your gross pay. And here, financial planners recommend that we try to stay in the 25 to 35% range, and 30% is a good rule of thumb. This is actually similar to the guidelines that mortgage underwriters use when you go to get a mortgage. So in a way, you're kind of underwriting yourself to see whether or not the amount of money you're spending on housing is appropriate. And again, I realize that right now, especially in major cities, housing is expensive. So don't be hard on yourself if you're not in line with these guidelines or parameters. It's just helpful to know where you are and where you might be able to make some changes. So here's some observations. Like the asset allocation grid, analyzing your spending, you really do need to take a consolidated view. It's not helpful just to look at your credit card or just to look at your Venmo or your bank statement, your debit card. You need to look at the whole picture. Also, technology makes this so easy to do. And back in the day when we all had check registers and paid cash for things and had store cards, it was hard to do. It's very easy now. So please, I encourage you to try doing this. And it is very easy to identify ways to make some changes. And like I said earlier, maybe it's not the latte, maybe it is the latte, but you will be surprised at where your money's actually going. I know my husband and I did this exercise before we bought our home, and we were surprised to see how much we were spending on the kids' activities. Now, clearly, they were a priority, but it was sort of a wake-up call. So you really will never know what you're going to find. So here's the last area of getting your financial house in order. And this is what I call sharing financial information. Now, I know we all have to be so careful about our privacy and not sharing any of our financial information with anyone we don't know. So I truly do emphasize being extremely careful about your financial information. But there are people in our lives that we should share some financial information with, and that's what this is about. So the 3 words I want you to take away are coordinate, inform, and update. So coming back to your key person, again, as a reminder, let your key person know where the ICE plan and file are located. You can also, if you're comfortable, let them know a couple of your most important passwords and your asset allocation grid, which again is a great way to determine where you have access to cash and where you have access to liquidity. And if it makes you comfortable, what you can do is even take a list of your passwords and your asset allocation grid, the most up-to-date one you have, put it in an envelope and just label it, for ICE or something like that. So someone knows if you're not able to pay your bills, they can step in and help you with it. Also, please let them know where your healthcare directives are, your financial directives, and your legal documents. Also, you should be sharing information with certain people in your family. Clearly, if you have a partner, you need to go through the ICE file and plan exercise together. You both need to be up to speed and informed. Also, it's so key to have your passwords organized and make sure that if you have a partner, that both of you know some of the key passwords. I can't recall if I've mentioned this already, but with privacy laws the way they are, it's really difficult to get access to someone's email. So that's one of the passwords you probably want to include on that vital password list. And it's important that both partners understand the sources of liquidity. Now, some of these guidelines also are key if you are serving as a financial caregiver. Perhaps you're helping an older relative get their financial house in order. These are the types of things you want to talk to them about. So here's some observations. Sharing this information truly does benefit both parties. Your key person is in a better position to step in and help you if need be. Both partners are better positioned to help manage the family's financial affairs. Also, when there are changes, make sure to update the key person and make sure both partners know when there are changes to your financial life. I also think what's nice about this exercise is you will have greater comfort talking about some of these financial topics. And The tools we've talked about tonight, whether it's the asset allocation grid, the ICE filer plan, those really can start the dialogue because they're tools that you can work on together. And starting these discussions can be difficult sometimes. So let's just conclude. I hope that you'll see that getting your financial house in order is a worthwhile investment of your time. I acknowledge that there is some time involved upfront the first time you go through these exercises. Once you go through the first time, you're really just maintaining it. It does require some discipline, but once you set it up, it doesn't take that much of your time. It is not something you can do once and just forget. As I've said repeatedly, life happens, things change. You need to revisit it. I also hope you can see that by going through these exercises, you can identify ways that you can simplify your financial life. And I'm a big fan of simplifying your financial life. Clearly, you can get rid of a lot of paper, a lot of files on your computer that you don't need anymore. It'll be easier to find important information. You may also identify the fact that you have too many financial accounts, and there could be opportunities to consolidate and reduce the number of financial accounts, which will make monitoring your financial life easier. If it's spending or credit card accounts, it'll make it easier to track your spending. But I caution everyone, please be careful closing accounts. Especially if it's a tax-advantaged account, something like a retirement account, you need to work with a professional and make sure that you're not triggering a taxable event by withdrawing the money rather than transferring it. Because if you withdraw it, you will pay taxes. So again, make sure to work with a professional if you're going to consolidate or reduce the number of your financial accounts. Also, when it comes to your credit cards, ironically, closing credit card accounts actually hurts your credit score. The credit rating agencies like to see that you can manage different types of credit. So if you reduce the number of credit lines you have outstanding, it does ding your score a little bit. I think it's worth it, but I just caution you to proceed very slowly, maybe close one a year, because you don't want to hurt your credit score more than necessary. I think lastly, I hope everyone can see that greater financial engagement is really a form of self-care. People talk about managing your health, your mental health, which is clearly important, but your financial health is also important. And I think by being organized and engaged, you're more likely to meet your financial goals because you'll know where you are, and it's better, you're better able to get where you want to go if you know where you're starting. I also think clearly you will feel less stress, you'll feel less overwhelmed. Last, you will have better relationships, I'm convinced, because money is difficult to talk about with our partners, with our parents, with our children. And by having these discussions, using these tools, I really think it will help create a better money dialogue and will lead to better discussions and better relationships. So with that, I just want to remind everyone that my website is manageyourfinanciallife.com, and the exhibits we talked about tonight are on the website. You can download those and take a look at the other things I've written. If you want to reach out with questions or feedback, I love feedback. It's easy. You can reach me at nancy@nancydoyle.com. And if you're interested in Twitter and would like to know more about all financial topics, because I'm independent, I can share things written by other people. I put my own work out there, but I also share things written by others, whether they are practitioners or academics. There's a lot of information out there about personal finance, and some of it's helpful and well written. And unfortunately, some of it is not, and some of it is actually even incorrect. So I like to curate things and share them when I think that they're helpful. So again, I'd just like to say thank you to Dylan and everyone at the Johnson County Library for inviting me to speak tonight. And I think we have time for some questions.
Excellent. I think you are right. And I don't see myself on my screen for some reason, but I'm assuming you can hear me right now.
Yes, and I can see you. So
Wonderful. Uh, and I'm sorry. So, Nancy, thank you. Thank you so much for all this great information. Everyone, I realize that was a lot to get covered in approximately 45 minutes. Really, the questions that we will get to here in just a moment were more related to financial products, which we will cover
sure.
momentarily. But I did want to point out to everyone, we have at the Johnson County Library, we have 20 copies of Nancy's book, Manage Your Financial Life, A Thoughtful, Organized Approach for Women, on a first come, first served basis to give away completely for free. To get your copy, go to the Central Resource Library's question desk. One copy per person while supplies last. So feel free to cruise on by the Central Resource Library at 87th and Farley and snag your copy. All right. So Nancy, we had those questions. Really, the first one was related to, you mentioned classifying your financial, expenditures, right? Mm-hmm. So breaking things down from, rent, utilities, entertainment, et cetera, et cetera. Do you have any recommendations for free financial products, mint.com, et cetera, you might recommend to people to check out?
Well, I'm glad you brought that up because I happen to think Mint is a great tool. If you're so inclined, not everyone is so inclined. I think Mint's a great tool because it does help you categorize your spending very easily. Also, what it does is it will let you know how your spending compares to what you spent last year in various categories. So I think Mint's great. And it also, it's easy to get a credit score. Mint has a lot of nice features, and I think it's a great product if you're so inclined. I think especially my kids both use Mint. I've encouraged them to use that because I want them to learn to be mindful of their spending, and I think it's a great tool.
Excellent. And by the way, we do have a complete series, a 3-part series on mint.com available at youtube.com/Joco Library. If you select the career and finance playlist, which by the way, this will not be the last time that I mentioned that playlist, it's available youtube.com/Joco Library. So if you like hearing about career and finance information and you don't mind seeing my face and hearing this voice, go there. You will not be disappointed. We have more questions coming in. So the juggling act is now starting. But speaking of products, you also talked about a password manager. I use one myself. I use the free Norton product, and it is absolutely excellent. Do you have any recommendations for a password manager?
Well, I agree. I also think Norton is a terrific company. And I use Norton as a security software, top notch. The one that I've used for quite a long time is called Dashlane. And Dashlane, you are allowed to have up to 50 passwords before you pay for the premium service. I use the premium service, but you can use the basic entry-level service for 50 passwords, which should be enough for most people. But no, I think I've used it for a long time. And again, Norton is another firm that gets very high remarks. Another thing in general that I encourage people to do is if there is a certain kind of software or tool you're thinking about, you can always ask your IT department at work. They may have recommendations because most people who work in the IT department are very tech savvy and they could have recommendations. Also, PC Magazine is a good resource to consult. They know what they're talking about. I'm sure you also have resources there at the library. They can take, I assume you have PC Mag and other resources they can access at your library.
So the availability of certain publications really depends, right? However, whether it's PC Mag, CNET, NerdWallet,
Mhm.
all excellent publications, all with, great information. I'm a huge fan of NerdWallet.
Yes.
Um,
Mhm.
but, you can kind of pick and choose or, kind of vet these sources against each other. And also, especially, I emphasized free products, right? You try
Mhm.
something out, it doesn't, you don't vibe with it, get another recommendation. But yeah, the Norton product for the password manager is fantastic. I think I have something upwards of like 125 different, password, unique password logins
It's
saved in that
great.
product. Yeah,
And just
I'm not sure what the limit is, but I haven't found it yet.
well, two other things I just want to add is I also think it's important that people not save their passwords on their browser. And also, please don't copy and paste your passwords, because if someone gets into your computer, they can look at your clipboard and see your passwords. Secondarily, I also think it's key that people not necessarily share their financial information with some of these tools. Make sure that if you're going to work with a financial tool, make sure it's vetted, make sure it's one of the tops in, because you don't want to just start sharing your financial information with some email you get saying, oh, this is a great tool for XYZ. You want to make sure that you're working with a credible firm, a highly vetted top name like a Norton or a Mint or something like that.
Excellent. Okay, so we have another question here.
Sure.
Do you have any additional information on how closing a credit card affects a person's credit score?
Sure. Well, the way your credit score works is the credit. There's a firm called Fair Isaac that creates the FICO scores, and there are 5 factors they use to determine what your credit score is. And in the order of importance, they are, first of all, timely payments. Secondly, is your utilization, which means if you have a credit limit of X, what percentage of that credit limit do you use each cycle? They also want to make sure, and I apologize if I don't have these all right at the top of my head, but I know actually the 5th is the number of credit lines you have outstanding. So it's the 5th most important. I think it's roughly 10 to 15% of your credit score. So it's not a huge impact. Clearly, the 2 most important, which make up 65% of your credit score, are timely payments, which is 35, utilization, which is 30. And I apologize, number 3 and 4, I can't recall off the top of my head, but I know that the number of credit lines you have available, that is the last category. So it's not a big impact, but it's important. If you were to say cancel, if you had 5 credit cards you weren't using and you canceled all 5 at once, it probably would have a material impact. If you cancel one at a time or close one at a time, it will not have a material impact, but just be careful.
Right. And so there's a flip side of that financial coin right here, which I'll go ahead and ask. Sure. Does adding a credit card also affect your credit card negatively? So, right, we know that there's going to be a credit check involved, but can you go into that?
Yeah, when you open a new line of credit, that does have an impact on your credit score, because yes, they want to see that you're using credit responsibly. But what I think creditors are concerned about, say you're in a situation where you've lost your job or you've fallen on hard times, but you're at the beginning of that part of your life, and if you open up several credit cards at once, it might be a sign that, oh boy, this person all of a sudden needs a lot of credit. There could be a problem. So I think that they're just trying to predict what your behavior is going to be, what your behavior is going to be with credit. So when you open a new line of credit, if you're young and you don't have any credit, that's actually a good thing because you're starting to establish a credit record. But if you perhaps have 2 credit cards and add a 3rd right away, there may be a slight negative impact because they're looking at, okay, how much potential could you draw on these credit lines at any point in time? It's a balancing act. So it also depends on your individual situation.
Right. And I might take a quick moment. So you mentioned young, right? And so, a
Yeah.
lot of times we think of young in terms of teenagers, right? Maybe
Yeah.
getting that first card for, getting gas, et cetera,
Mhm.
et cetera, or whatever. And then eventually spending too much on things. And then there's a talk and grounding and all that
Yeah.
stuff. But there's also, joking aside, there's also that very serious topic of being young in credit, being young in that financial
Absolutely.
development, right? Maybe getting into your 20s and 30s and not having that credit foundation established. Adding the same maxims apply, right?
Yes.
Trying to, responding to all those different mailers for the free, the credit cards with this and that. Thank you for going into both the closing and the opening, because I think that's also very, very helpful for those who are new to that credit game, right?
Well, and to that point, part of the reason why I mentioned the utilization is I've done a number of talks on college campuses and also to parents who want to help their children establish a foundation of financial literacy. And the utilization is really something that not a lot of people know about. And it's almost as important as paying your bills on time. Because when you're just starting out, you may have a credit limit of $1,000. And I talked to someone the other day, a student, and she said, well, I've been using my credit card for everything because I want to build up a credit history. Well, she was charging up to $800 or $900 every cycle and paying it off. But I talked to her about the utilization topic. She had never heard of it. So utilization is a really great way for young people to build up their credit score quickly. Now, don't sign up for a credit card and just leave it in your drawer and never use it, because you're not going to establish a credit history. Use it for small purchases, keep it ideally below 30% of your existing credit line, and that'll help you build up credit. And then your credit limit will go up and it'll be easier, but that's kind of tricky when you're just starting out.
Right. And real quick, to take another quick break from the Q&A. So
Sure.
you're talking about that 30% utilization as a nice little benchmark.
Mm-hmm.
Can you go into real quick that process of um, increasing credit limits? Is that typically more user oriented? Basically, you initiate a conversation with your creditor?
Yes, I mean, that's definitely something you can request. Oftentimes what happens is when you open your first credit card and it says, okay, Nancy, your credit limit is $1,000. And if you get on the phone and call them and say, could I please have $1,500 because I'm going to be traveling for my job and I need more credit limit, they'll say, well, that's fine, but we haven't seen how you use this credit card. We don't know if you'll be responsible. So that's why it's a good idea to get a credit card when you're young, even before you need it, and start making those small purchases. Because if you have a credit history of using credit responsibly, I think the credit card companies are more likely to give you an increase in the credit limit. They're not going to give you an increase out of the gate just because you ask for it. But if you can get a card even before you think you need it and start to use it, I've talked to some young people who say, well, Nancy, do I even need a credit card? I put everything on my debit card or I use Venmo. Well, you do need a credit card because there's some things you need a credit card for example, renting a car, or if you're going to be staying at a hotel for work. But also, if you someday want to get a mortgage, this is one of the most important things you can do to have a good credit score and have a better rate on your mortgage down the road, or a car loan. Any big ticket item you want to purchase where you're going to be borrowing money, you want to have established a good credit history.
So thank you for our quick little detour
Sure.
there. And I reward you with a very loaded question, which I will try to
Okay,
tame a little
here we
bit
go.
here. So, and keep in mind, everyone, Nancy is far away in the Chicago area. We have a question in the chat. How do you find a reputable and reasonably priced accountant? And so we might try to switch that around to be, what do you typically want to look for in terms of financial services?
Mm-hmm.
Go ahead.
I think I would divide that into two. If you are looking for, if you need an accountant or tax preparer, if say you decide you want to work with an accountant, obviously you should work with someone who is a CPA, which is the credential you really should have. If someone is helping you with either your personal or your business books, look for someone who's a CPA. And secondly, oftentimes, if you work with someone who has a smaller office, their rates will not be as high as the very big, prominent international global accounting firms, where most individuals don't need that level of sophistication, and you pay for that sophistication. So I would consider working with a smaller firm, someone who's local. And last, and possibly most importantly, talk to neighbors and friends. If they have a CPA they work with and they like that person, I would interview at least 2 or 3 people so you can compare and contrast the different styles, but go with a referral and interview a couple people, because you also want to make sure that you have a good rapport, because this is someone who's going to help you manage your financial life. And you need to feel comfortable asking questions. A lot of times when I speak, people will say, well, Nancy, I wanted to ask my accountant about this or my financial advisor, and I didn't want to look stupid. Well, the only stupid thing is if you really should ask the question. There are no stupid questions. I hope everyone understands that. If you have a question, it's so important that you feel comfortable asking your financial professional. So that relationship, that responsiveness, the rapport, those things are important, but absolutely get referrals from friends and family.
Excellent. Plus, those referrals mean the world to smaller operations, right?
Exactly.
Plus they might even give you a little referral bonus,
Well, usually not. But I think, I think with, close family and friends, if they have good experience working with a CPA, that's the way to go, because you want someone who's worked with someone for some time, and they know that they're responsive. They know that their work is excellent, that they give good advice. All those things are key, but go with referrals. And in general, oftentimes with a smaller firm, rate is not going to be as high, and you don't need to go with the flagship big name firms necessarily. If you have a complicated situation, you probably should consult someone at that level. It all depends on your situation.
Oh, that's an excellent point. Okay, so when putting together an in case of emergency plan for a relative who doesn't have one, they're getting older, what's the best way to ease them into that subject to persuade them it's in their best interest?
That is an excellent question, because this is a topic that a number of people have spoken to me about or asked me about, because finances are very private, and it's hard to get somebody to feel comfortable necessarily talking to someone. So I would say proceed slowly. And oftentimes, I know when you're having these difficult conversations, if you start with, let's have coffee and maybe we can start talking about your finances. See what they want to talk about first, because there might be a topic they're more comfortable talking with you about. Maybe they're comfortable talking with you about their home and their mortgage and their plan to pay off their mortgage. Once you get started and they can see that you're not being judgmental, that you're a good listener, that you are making them feel comfortable, then they will be more likely to open up and talk about other things. Now, that said, another thing we can all do to look out for our older relatives is talk to them when you're visiting, just from time to time, about, are they keeping up with paying their bills? Are they, just say, do you need any help with paying your bills? I could come over and help you, help you write the checks, or whatever they feel comfortable with. Because you want to make sure that they have the wherewithal to manage their personal finances. And you also want to have discussions with them about whom they're talking to, because there was just a statistic today about the dramatic rise in financial fraud affecting our older members of our community. It's a serious problem. So you want to make sure to start having these discussions even earlier than you think you need to. Establish that level of comfort, and also encourage your older family members not to give any information over the phone, not to respond to any emails. And you can just remind them, if your bank or your credit card company or the IRS needs to talk to you about something, they'll most likely send a letter. They won't call you on the phone. So that's a helpful reminder for our older relatives and people in our communities.
Excellent. Okay. At this point, 2 more questions. I'm not trying to jinx us, but the end is in sight. So, do you recommend finding a CFP, a certified financial planner, to serve as a financial advisor? If so, is there an organization that provides ratings for CFPs?
I am a big fan of the CFP credential, and that is a certified financial planner. And that person has gone through an extensive educational program. They sit for exams, they have continuing education. So it is the gold star in terms of working with a financial planner. And many people who manage money are also certified financial planners. And when you're looking to talk to somebody about financial planning or wealth management, what's nice about the CFPs is they are what's called a fiduciary, which means a fiduciary means they have to do what's in your best interest. And whereas somebody who is a stockbroker has a standard, what's called a suitability standard. And the example I use to explain the difference is, imagine if you go to the doctor and your doctor says, okay, Nancy, here's 2 different prescriptions. One is suitable for you, the other is in your best interest. Which prescription are you going to fill? The one that's in your best interest. So a fiduciary or a CFP, they can't have any conflicts of interest. They have to look out for you. So that's the gold standard. Now, you can go to the CFP's website to find people in your community who are CFPs and people that are also investment advisors. An easier way to look at someone's credentials is to go to, if someone is a registered investment advisor, they are regulated by the SEC. And there is a website that you can go to called BrokerCheck. And what you can do is you can look up that financial advisor and see if there's been any complaints, if there's any disciplinary action. You can sort of do an audit of, is this person, are they a good professional? Like the like the CPA, it's also a good idea to talk to family and friends who may have a financial advisor they like, a CFP that they've worked with. And just like with getting an accountant, I recommend that everyone talk to a couple of different CFPs after you've gotten some referrals, because the relationship is really important. You want to make sure you have a good rapport with this professional and that you have a good dialogue and that they're going to be attentive to your specific needs.
Absolutely fantastic. I apologize, I skipped one question. We could have ended there. That could have been the last question. And unless I get a wild hair when I edit, yeah, that's going to be the next to last question. So getting back to credit utilization, right?
Yes.
We have a really good question here. What about decreasing your credit limit if you don't need it? Canceling an account, et cetera, et cetera. Is this a good idea, bad idea?
Well, I think in general, I'm a fan of people having fewer credit cards rather than more, because I do believe we all should be analyzing our spending regularly. And if you have multiple credit cards, it's harder to do. It's harder to keep track of your spending. And usually people who have multiple credit cards are more likely to get into trouble with credit. I think you can technically look into reducing your credit limit. And one example, someone might say, well, wow, I have a big credit limit. I've been so good with my credit, and I'm worried that if I lose my credit card or it's stolen, someone could rack up some big charges that I would be responsible for. Keep in mind that if your credit card is lost or stolen and someone makes charges on your account, your maximum liability is only $50. That's the most that you'll be on the hook for. And that's one reason why I encourage people also to have credit cards, because they're actually more secure than debit cards, because you have that protection. So yes, you could probably reduce the credit limit, but keep in mind your liability is limited to $50.
Fantastic. Well, we have no more questions in the chat here, so I think we're going to cut it off. We solved everybody's financial problem. And by we, I mean, of course, you. So everybody, if you could take a quick moment to thank Nancy in the chat for just all of this. I hope you all found it helpful. Nancy, this was an absolute pleasure. So thank you for taking the time to share all of your info for this extremely beneficial program. Again, a quick reminder, we have 20 copies of Nancy's book at Central Resource Library. Come and snag one for yourself, for a friend, for a relative, one apiece. Once they're gone, they're gone. So cruise by the Central Resource Library at 87th Farley to snag a copy. We're coming up on gift giving season, by the way. So everyone, our next career and finance program is entitled, oh, wait, I need to go back to my other script because I have so many things going on. While I pull this up, I will tell everybody, we have our programs, our recorded programs available, youtube.com/Joco Library. You'll see a career in finance playlist. And again, if you are not super sick of seeing me and hearing me, pay no attention to me and instead lock in on the content, because we have so many things that are available as far as, careers, finance. It's absolutely wonderful. And I'm just lucky to be a part of it. I'm basically just along for the ride. So our next presentation will be next week, Thursday, October 20th. So for anyone who has their own business, this will be related to small business funding for your business. So 6:30 p.m. to 7:30 p.m. Again, that's next Thursday, October 20th. Details are available through our events page. That's probably how you got here in the first place. I will stop my yammering. Again, youtube.com/Joco Library for recorded programs. You'll see this one on here in the next week. If I can finally stop yapping, feel free to cruise by the career finance page, sign up for our monthly email news list so you can check out everything that's going on with the library. I really appreciate all of you being here. Nancy, I know you had a busy day and only a turkey sandwich somehow, so feel free to have something a little more substantial as it's getting later on in the night. I really appreciate that. Again, I see that question in the comment. So where can we pick up Nancy's book? Everybody, Central Resource Library, 9875 West 87th Street. So yeah, come on by, snag Nancy's book for yourself, someone else. Again, really appreciate it. And everybody have a fantastic evening. Thank you so much.